what's up, everybody? Friday, March 5th. I got a question for you. Are you slick? Are you slick? Well, if you are, I'd say don't be. And I'm going to tell you why. Today was a good example. I'm going to teach you a little lesson here. You know, good news is good news, folks. And bad news is bad news. Now, unfortunately, for a lot of market participants and market observers, they think they're smart, they think they're savvy. Hell, I spent a good portion of my career speaking in these kind of clichés, saying stuff like, hey, you know, good news is bad news and bad news is good news when it comes to the market. But that's wrong. Good news is good news and bad news is bad news. And when you go around saying things like, you know, good news is bad news, thinking that you're sophisticated and smart and you have some kind of special read on the market and, you know, you're one step ahead of everybody. You're not. You're not. You're trying to be slick. You're trying to sound informed. You're trying to sound sophisticated when all it is really is, again, short-term thinking. You see, everybody, most people anyway, when they see an economic release, when they see a headline, when they see some event, and the market doesn't react immediately like this and go in the direction that they think it should go, and likely really should go in that direction, but it doesn't happen just like that, they say things like, oh, good news is bad news, or it's baked in. Remember? I was talking about that several months ago. Baked, it's baked in. Even a few weeks back, we had a couple of Wall Street banks talking about the reflation trade is over, and then a week later it was on, now it's over again. I mean, don't do that to yourselves. Good news is good news. And good mental game is also good mental game. And to understand, it took me a long time to understand that good news is good news and bad news is bad news. And when the economy is improving, when the job market is improving, when things are starting to open up again, that's bullish for the stock market. Now, it didn't act that way early on this morning. It ended up, you know, reflecting reality. It didn't necessarily have to do that today. It would not have changed my view of things, but you have to understand that good news is good news. It's not immediately, sometimes it's not immediately reflected in the market. You know, the market could do crazy things. And prices, the way prices move around, it's really meaningless. I mean, you have to stay focused. How many times do I have to say this? You have to stay focused on basic conditions. You have to stay focused on policy. Tell me what changed in the last, week or two since we've had this correction. I'll tell you what's changed. Actually, something big has changed or is about to change. We're going to get another stimulus. All right, we're already, 650 billion up over last year in terms of spending. We're on a record pace. You know, we're going to get another stimulus. People are going to get more checks. They're going to get more money. All that, not all that, but a good portion of that flows to corporate profits. Profits are going to be good. The economy is going to come back online. Things are going to start opening up again. A lot of these supply constraints and these bottlenecks and things that have been in place because of the pandemic, and it's been causing price increases that are outside, I would say, that are outside the norm. Some of those things are going to moderate right now. So, I mean, good news is good news. But you hear people all the time, and look, I was guilty of it for a long time. It took me a really long time to understand that, what you see is what the reality is. And you don't have to try to be, Mr. Smarty Pants or Ms. Smarty Pants by thinking two steps beyond that. I mean, don't think yourself into a hole. Don't overthink the situation. It's not that hard. What's hard is like keeping your brain under control, keeping your emotions under control, keeping your thinking rational and logical. Good news is good news. Don't try to be slick. Yo, look, this is not the guy you want to be, Mr. Slick, at least when it comes to the market and trading. It's not going to help you. You may think that it makes you look smarter than everybody else, but you're not. It's not going to add up to anything. So remember, today was a really good lesson. Good news is good news. And yesterday I said, look, I wish I had unlimited funds to buy on that market dip until I see something change in a fundamental way. And that really comes down to policy. There's people at the top who control what's going on. They make decisions. Okay, it's called a government. They make decisions about fiscal policy. They make decisions about spending. They make decisions about taxation. The Fed makes decisions, although it's really not that important to the market. It's really that's really about price setting, but everybody gets all crazy about that thing. So remember, don't try to be slick because it's not cool. And good news is good news. Just be a little bit patient. You know, there's an old saying, the market always tells the truth, but it doesn't always tell the truth on an instant. Remember that. Have a nice weekend. I'll make some videos over the weekend, so remember to check into my YouTube channel and see everybody. Have a great weekend. Bye-bye.